Now on to today's market movers with easy to follow futures and options trades from CME Group.
Welcome to Market Movers. I'm Jim Urio, and today we're discussing the real-time deal or no deal that is the Brexit negotiations. We're looking at using British pound options to either hedge headline risk here or create additional trade opportunities. Joining me is Chief Investment Officer of Kingsway Asset Management, Scott Martin.
Hi, Jim.
Okay, so the British pound has lost approximately 10% just since the spring. Now, is that big decline all pricing in a rough Brexit, or does it have to do with the U.S. dollar as well?
Okay, so Brexit's been going on for a very long time, so I would say that is officially a rough Brexit. Let's call that out. However, Jim, I think there's some other things going on in this marketplace, one being the strength of the U.S. dollar, my friend, that is pushing down other global currencies, to name one reason.
Okay, let's say the Fed starts to pivot, because last time we heard from them, they said something about business investment moderating. Let's say that they pivot more dovish. Will that have a huge snapback effect on the pound?
It might, but here's the problem with that instance is that if that doesn't lead to a weaker dollar, or let's just say this market anxiety continues as far as the ES, which bleeds over into currencies, as you know, which rallies the dollar typically, as we've seen in this last, right, that could still be kind of that underlying current that still negatively affects the GBP, in my opinion.
I like it. Now, before we dive into our trade discussions, I'd like to point out, with all market movers, it's important to view these as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendation or advice. Prices and movements will vary. When we priced these out, the British pound was trading 1.3030. Scott, you're
up.
Up.
Thank you. So, Jim, we talked about some of the negative aspects of what I'm seeing in the GBP these days.
A rough Brexit.
Which could, a rough Brexit, and then just other things that I believe are out there with respect to maybe some pressure on the currency itself. I mean, just watch some of the parliamentary interactions that Theresa May is having these days. It should be its own reality show, and they don't seem to like what's going on. So I believe, Jim, looking out there's some attractive things that one could put on if there's some maybe bearish outlook. So therefore, I'm looking at buying, Jim, today the week 4 129.5, 127.5 put spread for approximately 52 ticks. This is going to cost you about $325 to put on. It's to make a potential $925. It expires November 23rd. It has underlying spot, as you mentioned, at 1.30. Now here's the thing. If you just look at the charts back into August, you can see how there's this range built in the GBP to say 132 and down to say 127 or so. So to me, there's that range where this GBP is going to play out in there, and therefore I like the attractiveness of put spread.
Like you said, it's trading 130.30 right now. I'm looking at the other way. I think a lot of bad news has been priced in regarding a rough Brexit. I think the U.S. dollar itself is unusually high, considering the fact that the Fed started to moderate a little bit on their talk. So I'm looking at buying the week 4, the same expiration, the 132, 134 call spread. I put it on for 37 ticks. Risks 210 to make a potential 1040. Again, to me, this is the snapback trade. And again, it's priced a little differently because it's further away than yours. So the market's telling you it probably won't happen. I say it probably will, but either way, the risk return is pretty beneficial.
You are saying it probably will. I love the risk return, obviously, because you get some nice reward if you do take this stance. Now, here's the only thing, though, is that you're right. This could be one of those situations for both of us, because I mentioned that pretty wide range we've seen since August. You mentioned the 10% retracement we've seen in the GBP recently. That wide range, Jim, may be one of those situations where if you like one of these two expressions, you might want to manage the trade itself just as it pans out.
Back to the Fed, real short answer. They did seem to have softer language. Are they going to change their tune for 19 in your opinion?
Yes.
Okay. Thanks for joining us on Market Movers. I'm Jim Urio, where we're hoping to make you a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.